Ladies and gentlemen, we are all aware that the current government's tenure comes to a close early next year. So to understand the context in which the 2019 general elections will be held and what would it really mean for the economy, I would like to invite on stage our lead panelists today. Once again, please put your hands together as I welcome founder and executive chairman of Capital First, Mr. Vaidyanathan. Mr. Neelkanth Mishra, Managing Director and India Equity Strategist, Credit Suisse. Mr. Vinayak Bahuguna, Managing Director of Arcil, one of the biggest asset reconstruction companies in the country. And of course, moderating the session will be Outlook Business Executive Editor, Mr. V. Keshavdev. Thank you, sirs, for joining us. And with that, over to you.
Hello. Yeah, it's a surprise pull-off. Yeah. Good afternoon, everybody. Thanks for taking time out from your busy schedules to attend the second edition of Outlook Business Leading Edge. And it's my pleasure to kick off the first session of the day, growth in an election year. We have a very good panelists out here, and we hope we dish out something which will be as good as the desserts after a sumptuous lunch. So, to put the context, I think for the first time in several decades, we are looking at a government from whom the expectation levels are probably the highest. I mean, we have seen 4 years of the Modi government, we have seen a slew of reforms that has happened. But slowly the narrative is changing on the ground because GDP growth is plateauing, there is inflationary pressures that is coming both from the crude and the MSP side. And clearly job creation is not happening at the pace that it was promised. And we are heading into a year, this year we are going to see 8 state elections, of which 3 are going to be in BJP held states, and then we enter the next year, which will be in general election. So let me start off by asking Neelkanth, you have been covering the markets for close to 15 years. Never before we have seen, so much anticipation around state elections and general elections. So what is your reading? What is your understanding of, how this government has fared? And you keep interacting with foreign investors nearly on a daily basis. So what is the sense that you get from?
I think there have been quite a few very structural reforms that have been undertaken. So, at the risk of sounding repetitive, things like GST, the Insolvency Bankruptcy Code, even things like RERA. I think, if you had asked someone 3-4 years back, were these very likely to happen in a space of, say, 1 year, and people would have dismissed that. But these changes have happened. The economy got disrupted while these changes were being implemented. By and large, I think it has stabilized. So many indicators are showing that the economy is starting to revive. But I see a few risks going forward. The first is that the recovery right now is very lopsided. So while the indicators at the upper end of the consumption spectrum are very strong, so airline traffic growth and durable sales, car sales, they're doing very well. At the bottom end, things are still not looking good. So if half the economy, which is, say, in agriculture, is not consuming, it's going to be very hard to see the economy really flourishing. The second change that has happened, particularly in the last month or so, is that the recapitalization of PSU banks, which had been undertaken in late October, now after the new RBI guidelines, the capital requirements in the banks will go up substantially. And so the growth capital that people expected would be available to them would be no longer available. And particularly in the light of the scams that have happened as well, I think decision making can slow down, and that can also affect as a drag on growth. One final point on the fiscal side, there is, the government's intention generally in a pre-election year is to stimulate the economy in a big way. This did not happen in the union budget. The expenditure to GDP ratio continued to fall. We have seen now the lowest number since 1980. But in some states, like say Rajasthan, Rajasthan government is hiring 110,000 people. They've given wage hikes to Anganwadi workers. So those are typical pre-election steps that governments take. At the union level, I didn't see that kind of a stimulus in the budget, which in a way is good because that leaves more fiscal room, or rather more room in financial savings to stimulate the private economy.
Get back to that. Vaidya, is there too much of attention or the government's time and money is going only addressing the supply side of the issue? So we are talking of bank recapitalization, NPA resolution, and the so-called easing of business, that kind of, just for you to set up shop. But what is it doing to really spur demand and growth? Because we are already seeing credit growth, which is like at the weakest.
Let me just take one step back before I address that question. I have no doubt in my mind that this government has been really reformist over the last 5 years or 4 years. And let me give you 2 or 3 instances to support that point. Right from the beginning, when they linked fuel prices with the market prices. Now, this was theoretically the correct decision, should have been done maybe a decade ago, or maybe 2 decades ago. But for some reason, India was running some huge fiscal deficits on this front. We were buying or importing oil at a particular price and selling it half the price in India. So that is one significant reform. The second is, making sure that direct benefit transfer through the Aadhaar process goes on. So when we think of some of these macro level reforms the government has done, they've done some put blocks, and which is why the fiscal deficit under control is not by accident. I think they've done a series of steps to make it happen. Now, let's come back to this specific question about demand creation. Now, our sense is that the credit growth for the last 3 years got quite jammed, actually, from a growth rate of about 16% or so, or 15% growing in the early 2010s. That suddenly come down to 5% or 4%. That had a lot to do with the fact that there was a lot of NPA in the system, and banks got stuck with that and focused all the energies there, and borrowers couldn't borrow because they had excess capacity, and the whole system, what we call traditionally we call the twin balance sheet problem. The twin balance sheet problem got stuck the situation, and things got rolled out. Things got stuck. Now, that was then. But as we speak, I'm frankly very bullish about the extent of demand that's going to come up in the next 3 years. And it is not just a vain comment made for an optimistic feel. It is driven by certain logics. We talk about the fact that the government in this budget has talked about investing 14 lakh crores in the rural economy. We're talking of 6,20,000 crores in the infrastructure. We're talking of some 4 lakh crores, if I'm not mistaken, for investment in railways. End of the day, if that's the kind of demand government is amount money spending, it is reaching some contractor's hands, the contractor is spending it somewhere, and that money is reaching somewhere in the ecosystem. And I can tell you, I was speaking to the promoter of Polycab, and these are the people who make wires and cables, and they distribute it all over the country. I was asking him, tell me real, forget all the talk about whether the Indian economy is really doing well or not, forget all the macro numbers, you tell me, are you feeling the impact? He said, you will not, you'll be surprised how much demand is coming from Bihar. He says, it will shock you. He says the amount of electricity pipes and the cables that they're asking is phenomenal. He said UP of late has placing huge orders. He said now that he's just supplying cables. And he says that his demand is going to go by 15% this year, and his turnover is going to increase. It's an unlisted company, but his turnover is increasing from 5,000 crores to 6,200 crores this year. So when I see such anecdotal conversation, and I connect the dots with the fact that the government is spending the 6 lakh crores and the 14 lakh crores, I feel that money has to reach someone, and someone has to buy. Now, therefore, I would not be surprised at all that the credit growth has been stagnating at about 5-6%, going up to 10%, 12% the year, going up to 14% year after that, and pulling back. I see it happening.
Mr. Bahuguna, you are heading one of the country's biggest asset reconstruction companies, and you have clearly seen that from an ARC perspective, there's a lot of business to do. But is it really, with the government bringing in the bankruptcy code, is it really helping you resolve the issues and really make money out of the ARC business?
Yeah, I think it is. clearly life before the code and life after the code are like winter and summer, that apart. A defined, time-bound decision-making within a forum which you can't stay out of is going to force the way for resolution or otherwise for many corporate cases, for example. And that will allow participation by investors, both local and global, to come in and lift the companies and the performances higher up, and so that they can then be in a position to start servicing debt and capital. So I think there's a sea of change, there's a sea of opportunities. In fact, I fear there won't be enough capital, because given just the size of the NPAs that are in the system today, but at least on some of the larger cases, the more meatier cases, we would imagine in the next 18 months, most of them would have been dealt with.
Neelkanth, Vaidya was saying about the government's ambitious plans to invest that kind of sum both in rural and in infrastructures. But like you said, there is definitely an issue of capital, and if so where does the government really go and raise the money from? And if whatever the capital is left, if you have this whole issue of, like even Mr. Bahuguna was saying that you cannot resolve the NP issues because it's like in huge number. Yeah. So where does that leave the government? First, it has to raise the money that it wants. And rest, there are a lot of issues that needs to be resolved and where it needs to kind of give the capital to the...
Okay, so let's look at capital in two forms, right? The first capital is that you need for the PSU banks. So the PSU banks are going to be left with a gaping hole once the recent changes of the RBI guidelines flow through the P&L and the balance sheet. So how do you plug that hole, right? And that, that out of that 2.11 trillion, 2,11,000 crores of recapitalization announced in late October, 1,35,000, so 1.35 trillion was the recap bonds, which have actually had no impact on the fisc. So under fiscal accounting rules, because it was a sort of a cashless kind of transaction, so if they need to, they can find another 2 trillion rupees there. Right? So the question is, how do you do it? I mean, how do you, 6 months after the last recap, how do you go and tell or decide that, okay, yeah, another 2 trillion is going to do the trick, right? And so this could actually be a prolonged process, and every month, every week that you lose is a delay. The second issue is on the other spending that they're doing, and like, say, for example, railways. So the government is increasingly relying on extra budgetary support, right? So like railways is raising its own funding, NHAI does its own, even rural housing, there is a meaningful amount that comes from NABARD. So there are other extra budgetary sources that the government is tapping. Is the government crowding out? I mean, as I said, the aggregate fiscal level, so state plus center. See, the state governments spend 90% more than the center. So it is wrong to just look at the central government and say, look, things aren't changing. Aggregate government borrowing as a percentage of incremental deposits is coming down, it's not going up. So there is more money left for the private sector. So that's one. The second issue is that financial savings as a percentage of GDP are going up. So this is an example I've used often, so apologies if you've heard this before. Half the economy is a net consumer of food, which is the top half. Half the economy is a net producer of food. If food price growth is high, there is more being transferred from the consumer to the producer. If that does not happen, there is almost 1.5 lakh crores of the transfer that does not happen, which is what the change is right now. And so which is why the bottom half is struggling to consume. The top half is actually seeing higher consumption and also higher financial savings. For most people in the room, if you get 10, 15, 20% more, your savings will go up. Whereas at the bottom half, if you give 20% more, they'll consume more. So financial savings are going up as well. So aggregate, so there is no dearth of capital. It is the ability to spend which is a challenge.
But we are also seeing that financial savings, household savings as percentage of disposable income is also going down. So when you are saying that the financial savings is also going up, there is an increase in the aggregate savings is also going
up. Yeah, so we can discuss where you got the data from. Because I'm talking about RBI data as of last year. And if you see inflows into mutual funds, if you see deposit growth, and there's no reason to expect that FY18 would be any different. So financial savings are going up, and there's no debate on that.
Vaidya, what's your take on this? Like you have said that already the government's capex is the highest compared to the private sector, and here you're talking of still more 1 trillion getting into railways and all those kind of stuff, ports, infrastructure. So with a stretched balance sheet, do you really think the government can achieve? And it has kept an ambitious target of 1 lakh crore in divestments. So do you really see all that getting done in the next 1 year or so?
Yeah, no, it's actually a good question, and it's a fair question to ask because people are asking this question. Whether you will really have the resources to make this kind of investments, the 14 lakh crores plus the 6 lakh crores plus the 4 lakh crores, where's the resources for these? And actually there are two things here. One is the resources, one is the will and the ability to really translate those monies into action, even if you did. If you noticed, many years at a stretch, budgets were announced, but a lot of the investments were left unspent and the department simply surrendered the monies back at the end of the year. Now, I take a lot of inspiration from the fact that the road construction is gone up, the kind of numbers, it's like crazy kind of roads, investment in roads happening. People are really giving us feedback that road construction is for real. Again, a micro-entrepreneur story, that there are a lot of entrepreneurs who purchase those road building equipments, who come to us for financing or even ask for financing for second hand of them. We say, why? They say, oh, the road construction has come. So their ability to convert those theories into real, I can say road construction is real, train construction is real. So ability, I think we should accept it's there. Now, with regard to funding, I think the big assumption here is the growth rate of, I don't know if the budget is estimated that at 7.5% or something like that.
That's for the next
so the big assumption is that we have to hope that happen. Maybe the policymakers and people in the government have that much more of a better view of the economy and get that feeling. So reasonably can be believed. But the biggest play here is the GST, because it is quite clear that even after implementation of GST, a lot of tax is still leaking because of because there is no matching of the bills. And from April 1, after GST comes through, it is expected to give a significant shot in the arm to raise those resources. I was asking the same conversation of someone, a very established fund manager by the name of Sanjoy Bhattacharya, and I asked him, saying that, look, Sanjoy, do you think this kind of fiscal deficit numbers of 3.5% this year will get met? Because, investment is already announced, resources, does it feel stretched? He said, look, listen, Vaidya, this Jaitley is too smart, and he will figure it out to get the funds. And if he must have a plan in mind that the GST will work. So I'm kind of inclined to the thought that when the e-way bill matches comes through, we're expecting a significant uplift in GST collections. Informal talk with many of the entrepreneurs we finance is that once the e-way bill comes, there is no escape from paying tax. So that's a big count.
Neelkanth, what's your reading of the GST leakages? I mean, the leakages that they're going to stop and that will really increase collections. I mean, that's a big bet that the government is thinking that
actually,
it will.
I think that the government is being too conservative in its GST estimates. The collections this year are well ahead of what you would call revenue neutrality. So, when the budgets for FY18 were presented by state and central governments, no one expected GST to happen. It was not part of the budgeting process. If you see the full year assumptions under taxes that have been subsumed by GST, they, for the center and states put together, would add up to about 10.6 trillion rupees. So 10,60,000 crores. If you see the run rate in the first 7 months till January, the data came out last night, we are actually running at ahead of that rate, right? And this is the first reported. And not to confuse you further, but what happens is, yesterday the government reported 86,300 crores for the month of January, right? And this was for companies that met their deadline. There are companies that file after the deadline as well, and the government does not go and revise those numbers. What we have observed is that in any given month, the cash that the government gets is substantially higher than what the first reported numbers are. So even the first reported numbers are actually at or above revenue neutrality. If you see the numbers in terms of cash collected, they're actually substantially higher. So the government, and I think for next year, given the lack of a trend line to work with, the government has been very conservative in its estimates on GST. They pretty much, this year we had 8 months of GST. They've done 8 into 1.5 and plus nominal GDP growth. That's what next year's GST number is. And I think it'll be higher than that because GST applies on indirect, is a revenue number, is on revenues. Big contributors to indirect taxes are petrochemicals, metals, cement, automotive. In every single segment, the nominal growth is well into double digits, if not mid-20s, because price itself is up 20%, say for petrochemicals. Metals, it's up meaningfully. I think it'll keep going up. And volume growth, even if it's 4-5%, which is low. So I think on the tax side, the government is actually undershooting on its estimates. I think they'll get far more tax in FY19.
See, frankly, when I talked about what Sanjoy said, and now I'm hearing what Neelkanth is saying, when I'm hearing renowned economists like these people saying, look, this tax is under budgeted, right? In fact, we'll get more. I actually get a lot of confidence in it and, let me say, inspiration that this year is going to be a big year, but they will pull it off. I hope you're right, Neelkanth.
Mr. Bahuguna, the net profits for mostly large Indian banks have completely slumped. It's nearly half from what it was like 3 years back. It was like some 91,000 crore. Now it has come down to 43,000. And the RBI's recent stress test has shown that if close to 20 banks will fall short of the capital adequacy of 9% if the gross NPA crosses 16%. So do you see the government pushing for consolidation in this kind of scenario?
It's hard for me to say. That is the stated intent of the government. It's widely acknowledged that we have too many small banks which don't have any particular space or a niche that they wish to sort of operate in. So I think to begin with, it would probably look at getting some banks into the retail side, some others onto the wholesale banking side, or perhaps even at regional level sort of consolidation of some banks. But would all of that make sense? I'm not too sure, because frankly, if you are not of a certain size today and you want to play in every soccer field, you're bound to get injured. So I think they'll have to take it a few steps at a time. Privatization, though not immediately on the agenda, I think is a foregone conclusion. Now, how long it takes, whether it's another term of the government or beyond that, one can't say. But I think that's the way it will eventually play out.
And in terms of negotiations where we are talking of ARCs having this huge pile of loans to feast upon, but there is this whole unwillingness of the bankers to take a haircut. So while it says that this is a good time for ARCs to do business, but actually the deal making is not really happening at the pace that you would want to. So what is your own?
Well, I think again that's in the past now, because frankly, when it comes to the action under the IBC in NCLTs, banks will have to choose between options that are thrown to them, and the best option is perhaps what they will have to pick and run with. They won't be able to say we would prefer something else, because the investors would come with a particular offer, a best offer on the table, and they'll have a finite time to live with it or suffer the consequences of a liquidation scenario on the other side. So in a sense, it's a blessing because this is forcing the decisions, something which the bankers might have known all along, but were reluctant to accept widely for fear of whatever consequence. But here in an organized manner under the so-called blessings of a court, a best transparent sort of offer is considered and accepted, then you have to move on.
But do you see the system actually geared to handle this kind of cases?
Look,
I mean, we are already having, you're talking of...
No, I think we are not today, just in terms of infrastructure, in terms of capital, in terms of number of professionals required in it. And it's because, you know, here we're doing and dealing with a stock position which has accumulated over the last 10 years. If it was a flow, I think the system would have been able to handle it. So let's acknowledge that. And on top of that, we got cases from BIFA, which were running in the thousands as well. So there's a huge load on the system. The approach of the government and the Reserve Bank, I think, has been good because they've started with the bigger accounts. The big businesses support a lot of smaller businesses. So if you fix the bigger problem, hopefully the smaller problems will also get auto-fixed along the way. So the start is good. And in spite of all skepticism and some fear, is trending all right. We're coming close to seeing some resolution in the big accounts over the next few weeks. We may still, maybe another year in terms of challenges and legalese that might go on, but I think the system is going to settle down fairly quickly. And you'll see much faster churn of capital.
You know, we're discussing this in the context of elections, saying that, look, what happens to reforms in the context of 1 year forward, right? And elections around the corner. The way I look at this or observe, I feel this government has done the big tickets out of the way a year and a half before the elections. I think they've been definitely mindful of it. So demonetization they did in 2016, knowing fully well that the impact of it will come in 2017, elections 2019, by that time it's done, dusted, buried, over, and by 2019 people would have forgotten it and economy will be bouncing back again. When you think of GST, they were very keen to do it because everyone knows after implementation of GST for probably a year or so, there is pain, there is pressure, small entrepreneurs will complain, input tax credit is an issue. We know the issues. They also know the issues. So I think they've done that early enough so that by the time 18, 19 comes, things are smiling again and people are okay. So I think that all the big ticket items are actually behind them, at least in the next 1 year. They are not going to relax, I feel, on this oil reform that they've already done, and those kind of things are out of the way. So I think, therefore, that the big ones are out of the way. They'll probably just run an efficient government and make all the investments of the 22 lakh crores they've announced. That will make people feel good, and that's frankly good for the economy also, because end of the day, India, after 4-5 years of lying low on the credit growth, if it ticks up again, everybody will feel good again. I think it's been timed well in such a way that in 18-19 there's no disruption. In this year, I'm expecting no new major changes, no Benami Act coming, no Aadhaar link to houses, nothing is coming. You can just have a smooth ride as far as the reforms are concerned, I think. If not reform, smooth ride as far as major disruptions of the government is coming, I don't think so.
Will it be as smooth as Vaidya says, the reforms over the next 1 year, or the growth in the next 1 year? Because you're already seeing on the private side, the capex cycle has really come off. I mean, we had seen very high growth rates, and we had seen 49% between FY 05 and 8. It has come down to 13% FY 9-12, and we are talking of 4%, which is now. So with no visibility in capex, balance sheets still being, delevered, and capacity utilization still not really up there. So where do you see the whole trigger coming on the private capex side?
Yeah, so private capex, I must say, is starting to turn around. It is very early days, but if you see, 3 years back, no one would have thought anyone would set up a steel plant again in India, right? But now already two large groups, the two of the largest companies have announced 5 million tons each of expansion. Now, this is very small compared to the point at which, at one point, 3 years back, we had 40 million tons of steel capacity being constructed. But at least 10 million tons, the announcements have been made. Telecom, I think there is massive capex happening. The 10 times growth in data consumption is not coming out of thin air. Everyone needs to invest. I think there is good investment happening on the metro rail side. It doesn't affect the state and central government fiscals, but it is being funded by JICA, by the European investment banks. There are alternative sources of funding that are being used. Very good action there. So I think in patches, capex is starting to pick up. Transmission capex has been strong all this while. Generation capex, I don't think will pick up for a long time. So I think, but yeah, it's very early days yet. Will it really revive the economy in a big way? I don't think so. Will there be more disruptive reforms? I mean, I would say that the RBI guidelines that came out were, I think they are very good for the medium-term health of the economy, but they will have some cost of growth in the next 12 months as the banks struggle to digest it.
So will this capex kind of, is it kind of, people have committed to it, or they are still waiting for then elections to kind of play out?
I don't think it's about elections at all. I mean, if India's steel demand is now 105 million tons, and it's growing at 4 to 5%, let's not forget, I mean, 6.5%, 7% is below what we should be doing, but 6.5%, 7% is very strong growth. And if it drives 4% steel demand growth or 5% steel demand growth, you need 1.5 furnaces every year. One furnace, a modern furnace can give you 3 million tons. You need 1.5 furnaces every year. Where are they? So now we have reached a point where we need to start investing in steel. I mean, there are other sectors where it is needed as well. Like in airlines, airports. You fly from Mumbai to Delhi, you spend as much time on the tarmac and in the air than it takes to fly from Mumbai to Delhi, because there is a congestion on runways, the congestion of terminal capacity. Capex needs to start.
But again, on the steel side, it is largely because the government kind of closed the doors on Chinese imports, and it created that artificial barrier, and suddenly things started looking good for the steel industry.
Not really. So you're right that it was the import decline which helped, but that happened because Chinese exports collapsed. So right now, India is a net exporter. So the import barriers are rightly non-existent, not needed. But what has happened, you're absolutely right, is that Chinese exports have collapsed, and that has given an opportunity. But I mean, you take it as they come, right? I mean, the point is that you need more steel capacity.
Okay. So how are your investors looking at the next 1 year? Is there too much talk around elections?
Yes, I think that is.
Is there money sitting on the sidelines waiting to come, or?
Money never sits on sidelines, right? So people, I mean, there are very few people who have the discretion to hold 15% of their or 20% of their funds in cash. Everyone has explicit limits, 5% at max, and the rest has to be deployed. So if they get inflows, they will deploy. If they get redemptions, they will sell off, right? So they are also agents. They are not principals really. And so are people waiting for more clarity on elections? I think many of the themes in India are multi-year, structural. I don't think an election can really change those trends very quickly. So I don't think it is really standing on the sidelines. I think people would rather wait for clarity on why have bond yields gone up, when will they come down, because they show some stress. They're also worried about currency. I think there is some concern emerging on the currency because the trade deficit has widened very sharply. And there is some political uncertainty.
So we'll take one last, since all the time is up. What are the key risks that you see to the government achieving the stated 7.5% growth that we are talking about? If everyone could just.
Yeah, I'd say it's external. If oil prices went crazy, for example, then certainly it has an impact on even currency, and therefore, your fiscal deficit can be a bit of a bother. And then current account deficit gets affected, and inflation goes up, interest rate goes up. Those kind of cyclical issues can happen. But that's got nothing to do with elections around the corner. It's just a macro risk. But that's a macro risk any time, any year for the next 20 years. The risk will always be there, as long as India doesn't become a net exporter of oil rather than being an importer. So that's sort of macro, but really anybody who looks at India like an investor, anybody who looks at 2 years, 3 years, 5 years, point to point and ignores these things shouldn't really bother. But risk specifically, I'd say oil. And Neelkanth is very, of course, confident about GST. I'm hopeful as well, based on anecdotal data. Whether the GST numbers are going to be so strong enough to fund this sort of an infrastructure financing. So that's a bit of a niggle. Oil is a bigger animal.
Mr. Bahuguna, what's your
I
take?
think I don't have anything more to say except I believe there will be some negative fallout of the lack of winter rain, and I hope at least the summer rains are going to be good, because that's going to set the mood, do a lot of things as well. That would be one area. The other would be prospects, if at all, of hardening interest rates. Just depending on the macros, we also, end up with very strange situations. So if interest rates were to remain stable and maybe a little more benign, I think we'll be on a strong footing.
And if you're meaning risks induced by the government, like the demonetization or GST, etc., forget it. This is election year. And if I was running a government and I had election coming 1 year from now, I would actually say, it's time to show results and focus on results, and I don't think I'm going to do any extraordinary bravado, and I think that's how the government would probably think.
Neelkanth, last view from your side. What happens if there is an nasty surprise in the election?
In the next election,
Next
the general
election,
election.
general elections.
So I don't think much will happen because if you're thinking about the markets, more than half of Nifty revenues come from outside India. Nifty and oil are actually positively correlated. So the global growth is okay. I think the equity market should be okay. They may not be roaring, but they will be okay.
So you don't see a crash like the way we did see on the Gujarat election day?
That was, because so many things happen globally, we confound, we all look in our well and see, oh yeah, this is why it happened. But there are global changes happening as well. I don't see, that's a year away, but, or maybe less than a year away, but the point is that a volatility for a week or two is not really a trend. If you see 2004 as well, there was some panic in the market, but then the economic momentum takes you through.
So largely the confidence will stay irrespective of which way the verdict goes.
I think the changes are structural. I continue to believe state governments matter a lot more. There's no change happening there. There are good reforms happening in UP, and there are changes happening in Maharashtra, in Gujarat, it's everywhere.
Thank you, gentlemen, for taking time out and sharing your perspectives.
Thank you. Thank you very much.